Hello traders, you are welcome back to the Forex Geek channel, and I especially welcome you to this video where we are going to be diving deep into crypto breakout strategies. Okay, if you have ever wondered how to identify major price movements in the crypto market, then this video is for you. All right, breakouts are a trader's best friend when it comes to catching big moves, but how do you spot them before they happen? Let us get started and break down everything you need to know to capitalize on breakouts in the crypto space. So what exactly is a crypto breakout? Simply put, a breakout occurs when the price of a cryptocurrency moves beyond a key support or resistance level. It could be a dynamic support or resistance. It could also be a static support or resistance, okay? Either ways, it is a breakout. All right. For instance, if Bitcoin has been trading within a certain price range for a while, let's look for a very good example. Okay. Now, we can see that around this zone, Bitcoin was actually consolidating, right? We had a consolidation around here. Well, it was a wide consolidation though. Yes, we had a wide consolidation around here, but eventually we had a breakout to the upside. You can see that the price actually broke out from the, let's just narrow this down a bit. Okay, price actually broke out from the resistance. Okay, if Bitcoin have been ranging for a while and then maybe you notice a sudden breakout from a resistance, it's often a signal of an uptrend beginning. Guess what? Look at what happened. We had a breakout, we had a retest, and we had a continuation all the way up, all the way up, all the way up to this point. Right? So this is what we call a breakout. Okay, so now in the crypto world, breakouts are particularly important because of the market's volatility. Remember, the crypto market is a very volatile market. So the price can surge quickly once a breakout occurs, leading to substantial trading opportunities for those who are quick to act. But how do you spot these breakouts before they happen? Let us just move on to the next, section of what we have in this video, right? Okay, now we're going to be looking at how to spot breakouts before they happen. Okay, timing is everything when it comes to spotting breakouts, yeah, and knowing what to look for is essential. Now, here are some key indicators and patterns that you can use to spot breakouts. The first, obviously, is support and resistance. You cannot do without it, right? You cannot do without support and resistance if you are dealing with breakout. Okay, the first step is in identifying a potential. The first step in identifying a potential breakout is identifying clear resistance and support levels, because these levels represent price points where the market has struggled to go higher or lower in the past. A breakout occurs when the price moves beyond these levels. Okay, now in some cases, you might actually see triangular patterns. One of the most reliable chart patterns for breakout traders is the triangular pattern. Sometimes you might see triangular patterns. It's not all the time that breakouts are going to happen after rectangles. This is an example of a rectangular pattern, but in this case, you can see there was a triangular pattern. Isn't this a triangle? This is a triangle, right? I'm going to reduce this. No. This is actually a triangle, right? So triangular patterns are actually one of the reliable patterns as well. They occur when the price moves within converging support and resistance lines, creating a triangle. So these ones are usually dynamic support and resistance levels. Okay, so a breakout happens when the price breaks out of this triangle, either to the upside or to the downside. In this particular case, it was a breakout to the downside, and you can see we had a good number of pips. If you had taken advantage of these breakouts, this was quite a good move. All right, and then we're going to look at candlestick patterns. Certain candlestick patterns can signal breakouts, such as bullish engulfing pattern or a strong doji. All right, for example, if you look here, you can see we had a bullish engulfing pattern around here, right, where the bullish candle swallowed up the previous bearish candle, right? So you watch out for candlestick patterns to validate a breakout or a particular move. Okay, these patterns indicate potential reversals. In this case, this was actually a reversal pattern. You can see that price got rejected and went up after this bullish engulfing pattern formed. Okay. Then you can also add technical indicators such as moving averages, right? You can actually decide to add perhaps just add a moving average to also confirm trends. right? You can decide to work with the 50 and the 200 EMAs. All right, the 50 and 200 EMAs are, they are good indicators to use. The 50 and the 200 EMAs. All right. All right. So a breakout often happens when the price crosses above or below these moving averages, signaling the start of a new trend. Now, let us look at what happened around here. In the case of this triangular breakout, look at after the triangular breakout happened from the trend lines, you can see that the moving averages also confirmed it. Because see, there was a change in structure. Look closely. You're going to see that there was a change in structure. After price got broken out from this trend line support, the moving averages started curving downwards and price suddenly started trading below the moving averages from up to below. Sorry, from above the moving averages to below the moving averages. Can you see that? So the moving averages also confirmed this breakout. Now, when trading breakouts in the crypto market, you would want to focus on the right time frames. While you can spot breakouts on any chart, the most effective time frames for identifying high quality breakouts are typically 1 hour, 4 hour, and daily charts. Okay, but one thing with these, charts are, they are mostly used by perhaps day traders or swing traders, right? If you are a scalper, you can still identify breakouts on smaller time frames. But the only thing I'm going to tell you is that whatever analysis you do on higher time frames, they actually tend to be stronger than those done on the smaller time frames. Okay, but it doesn't mean that the smaller time frame analysis are not worth doing. Okay, it's just that, of course, higher time frames have an upper hand over the lower time frames. Okay, shorter time frames like 15 minutes charts, they can also show breakouts, but they may be less reliable due to the volatility in the crypto market. The longer time frames, however, give you a more reliable signal as they are less affected by short-term market noise. It's important to remember that in crypto trading, volatility can create breakouts at any time. So always keep an eye on the broader trend across multiple time frames to confirm your breakout signals. Now, volume plays a crucial role in confirming a breakout. It's one of the key factors that separates a fake breakout from a genuine one. All right, it's actually one of the key factors that separates a fake breakout from a genuine one. When the price breaks above a resistance, for example, but the volume remains low, this could be a sign that the breakout is not likely to hold. On the other hand, high volume during a breakout suggests that there is strong market participation and that the price that the price movement has a greater chance of continuing in the breakout direction. So using volume alongside the technical indicators can significantly improve your chances of catching a successful breakout. As with any trading strategy, proper risk management is key to success, especially when trading breakouts. The volatility in the crypto market can be intense, so it's important to protect your capital while taking advantage of breakouts. Okay, here are a few risk management tips to keep in mind when trading breakouts. First of all, make sure you use stop loss orders. For example, if I wanted to trade this particular breakout to the downside, after I have confirmed my breakout, you can see there was actually an increase in volume. Okay, I can enter a sell. My stop loss should be above the previous swing high, and then for my take profit, I can actually use key support zones. I can use key support zones for my take profit. Okay, just ensure that you have a realistic target. All right, ensure you have a realistic target and make sure you use good risk to reward ratios, and do not over leverage. Do not over leverage. All right, it's very important. It's very important. So that is it for this guide on the crypto breakout strategy. Now you know how to spot breakouts, which indicators to use, and how to manage your risk. By applying these strategies, you will be able to maximize your chances of successful breakout trades in the fast-moving crypto market. If you found this video helpful, be sure to like it and subscribe for more trading tips and strategies. Leave a comment below if you have any questions or want more content on specific crypto trading strategies. Thank you for watching and happy trading.